All right, so are you ready? We're going to dive deep into Warren Buffett's world today.
Sounds good.
I was looking at this letter, and I'm thinking this isn't just another boring financial report.
Oh, no, no.
It's like he's giving a master class in business and investing and throwing in some just good old life lessons.
Yeah, I know what you mean.
Yeah.
What really struck me is, you know how he kind of pulls back the curtain and shares his thinking process?
Yeah.
It's like, it's like having a mentor, the Oracle of Omaha, like personally.
It's funny you see that because I was thinking the exact same thing.
Yeah.
It's like we get to peek right into the mind of one of the most successful investors
Ever.
right?
Yeah.
So I think what we got to do is we got to go through this thing and like pull out the golden nuggets,
Golden
like the must-know stuff about how Berkshire did, how he invests, and there's this crazy story about an RV guy
Oh, yeah.
named Pete that you got to hear.
You won't believe it.
Yeah, and what I like is right off the bat he comes in with like a dose of humility.
Well, it's refreshing, isn't it?
Yeah, you don't see that from CEOs a lot.
No.
I mean, well, we're talking about like the Berkshire mindset, right?
Yeah.
And he just straight up says he made mistakes.
Yeah, he's very open about that.
Yeah.
And it's not just about, misjudging a business or something. He even talks about picking the wrong people sometimes.
Right.
And the important thing he says is to correct them quickly.
Yes.
And I think that's a valuable lesson for all of us, right? You gotta own up to your, shortcomings.
Yeah.
Don't let pride get in the way of making the tough decision.
Well, it's almost like that saying, act quickly, learn faster.
It is, isn't it?
It's so much better than trying to like sweep things under the rug.
Oh, absolutely.
Right. And he's all about transparency, accountability, especially with, Greg Abel coming in as CEO.
Oh, that's right, yeah.
I mean, do you think if more companies were honest, would it actually be better for them?
Right.
That's a fascinating question.
Right.
In terms of building trust with investors.
Yeah, exactly.
I mean, it's how much do we value authenticity?
Right. It's true.
In this world where everyone's trying to present a perfect image.
Yeah, so true.
Yeah.
But okay, so let's get to that RV story.
Oh, yeah.
This is where it gets juicy.
This is good stuff.
So there's this guy, Pete Laird,
Uh-huh.
and he emails Warren Buffett.
He does, out of the blue.
Out of the blue.
Yeah.
And he's built this like massively successful RV company, Forest River. And he's like, I'm ready to sell. And he sends the data and his price, like, boom, that's it.
Very straight to the point.
Right.
No messing around.
No messing around.
That's confidence, right?
Yeah.
So Buffett, he's got to be intrigued.
Of course he's Warren Buffett.
Well, exactly right. So he does his homework, of course.
And he's like, okay, come on down to Omaha. Let's talk.
Can you imagine being in that room?
Oh, wow.
Two legends just like
hashing it out.
Yeah, hashing out a deal.
I'd be nervous.
I'd be sweating bullets.
Oh, yeah.
All right, so they're talking compensation, right?
Uh-huh.
And Buffett's like, name your price.
Wow.
That's some serious trust, don't you think?
Oh, huge.
Like he's basically saying, I believe in you that much. So Pete says he wouldn't want to make more than his boss, which is, I mean, come on.
Yeah.
So he's like $100,000 a year.
He must have thought Buffett was joking, but here's the twist.
There's always a twist.
Always a twist, right? He's like, okay, but I want a bonus. 10% of anything above what we're already making.
That's the part that gets me, right? It's not just about finding a good person. It's about trusting them.
Trusting them to do what they do best.
Yeah.
And, Buffett always says he values talent over degrees.
Yeah.
Pete's a perfect example.
And remember how he compares Pete to Bill Gates,
Right.
right?
Dropping out of Harvard.
Dropping out of Harvard to chase his vision.
Yeah.
Okay, so we got the Berkshire mindset. We got this lesson about trusting your gut when you're picking people.
Right.
But what about like the bottom line? How'd Berkshire actually do in 24?
Well, it was a bit of a mixed bag, to be honest.
Really?
Yeah.
I mean, overall, it was a positive year.
Yeah.
But believe it or not, more than half of their businesses actually saw earnings go down.
Wow, that's surprising.
Yeah, a little bit. But
so then what were the highlights then?
Well, the insurance operations were a standout.
Okay.
Especially Geico.
Really?
Yeah. They had a huge turnaround under Todd Combs.
Okay.
He's getting a lot of credit for modernizing their approach, making things more efficient.
Yeah.
Plus, rising treasury bill yields gave their investment income a nice boost.
Okay, so even with some struggles, there were some bright spots.
Oh, yeah.
It's all about that diversification, isn't it? It is. It is. Not putting all your eggs in one basket.
Yeah, and there are railroad and utility businesses, which are, I mean, they're huge.
They're massive.
They did okay.
Yeah, they showed some growth.
But here's what really caught my eye.
What's that?
That tax bill.
Oh, yeah.
We're talking record-breaking territory.
Record-breaking.
Okay, $26.8 billion in corporate income tax.
Wow.
More than any company in U.S. history.
It's incredible, isn't it?
Yeah.
And it's because they have this policy of reinvesting profits instead of paying dividends.
Right.
Remember that one dividend they paid way back in '67?
He called it a bad dream.
A bad dream, yeah.
Yeah.
So instead of distributing those profits, they're pouring it back into the business, which leads to, a bigger tax bill later on.
Makes sense.
To kind of put that payment into perspective,
yeah.
Imagine sending $1 million check to the Treasury every 20 minutes.
Wow.
Day and night for a whole year. Berkshire would still owe money.
I can't even wrap my head around those numbers.
It's hard, isn't it?
But it really does show.
It does.
Their commitment to long-term growth.
Absolutely.
And their belief in American business.
It's a vote of confidence, wouldn't you say?
Yeah, absolutely.
They're putting their money where their mouth is.
So where exactly is all that money going? I mean, what's their investment strategy these days?
So they've got kind of a two-pronged approach when it comes to equities. On the one hand, they have controlling stakes in wholly owned subsidiaries.
Right.
Those are the 189 businesses.
Yeah.
And then on the other hand, they hold minority positions in big public companies.
Right, like your Apples, your American Expresses, your Coca-Colas, all that.
Exactly, yeah, the big names.
That's a pretty diverse portfolio.
It is.
What are the advantages of each way?
Well, with the controlling stakes, obviously they have more say, in how things are run.
Right.
But it can be harder to get out.
Okay.
Things go south.
Yeah.
Minority positions, they offer more flexibility. But less control.
Right. So it's finding that balance between influence and agility.
Absolutely.
But what's Buffett's overall philosophy when it comes to investing?
He's a big believer in equities.
Okay.
But he's wary of holding on to too much cash.
Really?
Oh yeah.
Okay.
He's worried about inflation,
right.
And the devaluation of currency, especially with what he calls fiscal folly.
So he's basically saying, put your money to work.
Exactly. Don't let it just sit there.
Don't let it sit there.
Yeah. He sees investing in businesses as a way to participate in the growth, the innovation of the American economy. He's betting on, the ingenuity and the resilience of American companies.
It's all about the long-term vision.
It is.
Okay, so we know Berkshire is all about American business, but there's this interesting twist in this letter, right? Japan.
Ah, you caught that.
Yeah.
Yeah, it's fascinating, isn't it?
Yeah.
So over the past 6 years, they've been quietly building up a stake in 5 Japanese trading companies.
Okay.
ITOCHU, Marubeni, Mitsubishi, Mitsui, and Sumitomo.
Wow.
And this is where it gets really interesting.
For a guy who's like the Mr. American business,
right,
this whole Japan thing, it's a pretty big deal.
It is. It's like he's saying, hey, there's value to be found all over the world.
Yeah, exactly.
Even the Oracle of Omaha is willing to look outside his comfort zone.
So, but this isn't like some random bet, right?
Oh, no.
Like they've been looking at these companies.
I've been studying these companies for years.
Okay, so what makes these Japanese companies so special then?
Well, initially, they were drawn to their strong financials, what they saw as undervalued stock prices.
Okay, so classic value investing.
Exactly.
Find the hidden gems.
The hidden gems.
Buy low, sell high later on.
That's the idea.
Makes sense.
But as they got to know these companies better, they discovered something even more compelling.
Okay, what's that?
These Japanese firms, they operate with a philosophy that's strikingly similar to Berkshire's own.
So it's more than just the numbers.
It is.
It's about finding companies that share their values.
Exactly, a shared vision.
Yeah, their long-term vision. So how does that actually work?
Well, these Japanese companies, they're known for this disciplined approach to capital allocation.
Okay.
They're not flashy. They're not impulsive.
Right.
They're focused on making smart, sustainable decisions.
Okay, so give me an example. Like
Sure.
how does that play out?
Well, take dividends, for instance.
Good.
You know, these companies, they're not pressured. Yeah.
To pay out huge dividends just to, appease investors.
Right. Who want that quick return.
Right, exactly.
Okay.
They increase dividends strategically,
Okay.
but they prioritize reinvesting those profits.
Right. Right. Just like Berkshire.
Yeah, exactly.
You know, back to 67.
That's right.
That one dividend.
Yeah, yeah.
Okay. I see the parallels here.
And then there's their approach to share buybacks.
Okay.
They'll repurchase their own shares when they believe the stock is undervalued.
Right. Right.
Which can be a powerful way to boost shareholder value over time.
So they're not just hoarding cash.
No.
They're actually using it strategically.
They are. They're actively managing it
Okay.
to create value.
Got it.
And another thing that impressed Berkshire
Yeah.
was their executive compensation practices.
Well, he's not a fan
Yeah.
of these crazy CEO salaries.
No, the excessive pay.
Yeah. And he sees a real contrast with these Japanese firms.
Really?
Their CEOs, they're not earning astronomical salaries.
Okay.
They're not getting those crazy bonuses.
Okay.
Their compensation is much more reasonable and aligned with the long-term performance.
So it's almost like they're saying, we're all in this together.
Exactly.
Let's build something great.
For the long haul.
For the long haul.
Yeah.
I like that.
And that shared philosophy is a big reason why Berkshire is so committed to this investment.
Okay.
They see these Japanese companies as kindred spirits.
Okay.
Partners who share their vision of building enduring, profitable businesses.
So strong financials, undervalued stocks, a shared kind of philosophy.
A shared philosophy.
Okay, no wonder they're so into Japan.
And remember, they've backed it up
Yeah.
with a significant investment.
Oh, why?
Over $23 billion.
Wow, that's a lot of money.
It is, with plans to potentially increase it even further.
Okay, but there's another part of this that I found interesting.
What's that?
It's how they're using yen-denominated borrowing.
Ah, yes, the yen-denominated borrowing.
What's the thinking behind that?
Well, it's a smart way to manage currency risk.
Okay.
So by borrowing money in Japanese yen
and
then investing in Japanese companies,
yeah,
they're essentially creating a currency-neutral position.
So if the yen gets stronger,
right,
the investment gains, they're offset
exactly
by the cost of repaying the debt.
They're hedging their bets, essentially.
Like a built-in hedge.
Exactly.
Right. Okay.
They're not trying to predict the future of exchange rates or anything.
Right.
They're just trying to neutralize that impact.
Yeah, that's pretty sophisticated.
It is.
Most people wouldn't even think about that.
Well, it highlights the level of detail and strategic thinking that goes into managing a global portfolio like Berkshire's got.
Okay, so let's shift gears a little bit.
Okay.
Let's talk about something closer to home.
Okay.
Berkshire's bread and butter, right? The property casualty insurance business.
Right.
Now, I gotta be honest.
Yeah.
Insurance isn't like the most exciting topic.
It's not always, no.
But I have a feeling you're gonna make this interesting.
I'll do my best.
So what's so unique about this industry?
Well, what's interesting is it operates on a very unique model.
Okay.
It's all about managing risk and balancing the inflow of premiums with the potential outflow of claims.
It's almost like walking a financial tightrope.
It is. You're taking in money up front.
Yeah.
But you might not know the true cost of those policies.
Right. For years.
Decades even.
Decades even. You're right.
Wow.
Think about those asbestos claims that are still being paid out today.
Oh, gosh, yeah.
Exposures that happened 50 years ago.
It's a long game. It is a long game.
Right. Patience, discipline.
Absolutely.
It's complex.
It is complex.
No wonder Buffett said you need a certain psychological makeup.
That's right.
To succeed in this business.
He's not wrong.
So, but Berkshire, they seem to thrive in this.
They do.
So what's their secret?
Well, first and foremost,
yeah,
they have the financial strength
to
withstand even the most extreme losses.
Okay, so like when a hurricane hits, a wildfire breaks out.
Exactly.
They're not going to panic.
They don't panic. No.
They got that fortress balance sheet.
That's right.
That can weather any storm.
That's a good way to put it.
And that must be,
oh, yeah.
reassuring for for their customers.
Absolutely, knowing that they're backed by such a solid company.
Right, so where does that strength come from?
Well, it comes from their diversified business portfolio.
Okay.
And their long-standing commitment to conservative underwriting.
Okay, so they're not taking unnecessary risks.
Exactly. They're being very selective about the policies they write, the premiums they charge.
So they're not just like gambling.
Right.
They're calculating.
They're calculating, they're understanding,
Yeah.
and pricing it accordingly.
Okay. I like that approach.
And another advantage they have is their independence from reinsurers.
Now, reinsurers, those are basically insurance for insurance companies, right?
Exactly.
Okay, good.
You know, they help spread the risk,
Yeah.
provide financial backing in case of those catastrophic losses.
Right.
But relying on reinsurers can be expensive.
Okay.
And it can limit an insurer's flexibility.
So by not relying on them so much.
They save money.
Okay.
They maintain greater control.
Got it. So it's like being your own safety net.
Precisely.
Okay.
They're essentially self-insuring to a large extent, which gives them that competitive edge.
Okay. Yeah.
And of course, we can't forget about the human factor.
Right.
They've got an incredibly talented and experienced team of managers.
Starting with Ajit Jain.
Oh, Ajit, he's a legend.
Yeah. I mean, Buffett said finding him was like winning the lottery.
That's right. He's that good.
Okay. So what makes him so special?
Well, he's known for his cautious approach.
Okay.
His deep understanding of risk.
Yeah.
And his ability to build a world-class insurance operation.
Yeah.
And Buffett trusts him implicitly.
You know, it's a good reminder that even in a business as complex as insurance, people still matter.
They do.
Right.
Having the right team in place makes all the difference.
Yeah, their track record speaks for itself.
It does.
Billions in profits.
Billions.
And they built this massive float that fuels their investments.
It's impressive, isn't it?
It really is.
It's a testament to their long-term vision, their disciplined approach.
Yeah.
And their ability to navigate this, this complex industry.
Okay. So we've talked about Berkshire's philosophy, their investments, their insurance business. But there's one more thing we got to talk about.
Yeah.
And that's the upcoming annual meeting in Omaha.
The big event.
It's practically a pilgrimage.
It is.
For Berkshire shareholders.
Like the Woodstock of capitalism.
Yeah.
Tens of thousands of people descend upon Omaha every year to hear from Warren and his team.
They ask questions.
Soak up the culture.
It's more than just a meeting. It's like it's an event.
It is. It's a phenomenon.
Yeah. So this year they made a few changes to the schedule, but the heart of it is still the same.
Yeah.
It's all about giving the shareholders a chance to connect with the company.
Exactly.
And its leadership.
Yeah.
And of course there's, all the Berkshire merch.
Oh, yeah.
For sale. Plus some special stuff.
Always some special things, yeah.
That's unique to each year. So the hot item this year is this new book.
Oh, yeah. What's it called?
60 Years of Berkshire Hathaway.
Okay.
But it's not just, any book.
No.
It's a special Charlie edition.
A Charlie edition.
Yeah. Interesting.
It's filled with never-before-seen photos, quotes, stories about Charlie Munger.
Wow.
Compiled by former employee Carrie Sova.
Sounds like a must-have.
Yeah.
For any Berkshire fan.
Yeah, and I bet those Q&A sessions with Buffett, Greg Abel, Ajit Jain
are going
to be packed.
As always.
Those are legendary. You get to hear their unfiltered thoughts on everything.
Everything, yeah.
It's like a free masterclass.
It is.
In business and investing.
All for the price of admission.
Okay, and they've streamlined the schedule.
Yeah.
But some traditions, they're untouchable.
Untouchable.
The Brooks Run.
Of course.
Still happening.
On Sunday morning.
For
the energetic folks.
The energetic folks, yeah. Though I think Buffett said he's planning on sleeping in...
Well, he's 95.
He is.
I mean...
Even legends need their rest.
He does. Even legends need their rest.
That's right.
He does have a sense of humor about it all.
He does.
And speaking of humor...
Yeah.
He mentioned his sister, Bertie.
Oh, yeah. Bertie's coming.
Is going to be at the meeting this year.
Wow.
And he told this funny story about her and her cane.
Okay.
She claims when she uses the cane, men stop hitting on her.
That's classic Warren.
Classic Warren.
A little mischief.
Yeah, right.
Mixed with wisdom.
And he asked people to watch Bertie and see if her theory holds up.
Oh, that's great.
That's Warren Buffett, right?
He knows how to entertain.
He does. He does. He does.
That's for sure.
So it sounds like this year's meeting,
Yeah.
it's going to be another one for the books.
It does. It does.
A chance to celebrate the company, get insights from the leadership, connect with other investors.
It's a unique event. That really captures the spirit of Berkshire Hathaway. You know, that blend of business acumen, long-term thinking, and that down-to-earth approach.
Yeah.
It's resonated with investors for decades.
So we went through the nuts and bolts.
Yeah.
You know, their performance, the investments, even their company culture.
Yeah.
But what gets me about these letters is that Buffett always goes beyond just like the numbers, you know?
It's true.
He shares these little pieces of wisdom that you can use anywhere, not just investing.
You know, his letters are almost like a philosophy course disguised as a financial report.
Right.
And one of the most consistent themes
Yeah.
throughout his whole career has been the importance of long-term thinking.
Right. He's not about like chasing fads.
No.
Or trying to get rich quick.
It's about building something sustainable.
Yeah.
Something that'll last.
You know, I was thinking about how he said Berkshire is far more youthful now than it was back to 65.
Yeah.
And it's like they've figured out how to stay young, stay relevant in the business world.
It's amazing, isn't it?
Yeah, they adapt, they evolve.
They do.
But they stick to their core principles.
Yeah, they do.
It's like, what are those core principles?
Well, you know, value investing, disciplined capital allocation, and a commitment to building great businesses.
It's not just about making money.
No.
Right. It's about doing things the right way.
The right way, yeah.
Buffett, he's big on integrity.
Yes.
Honesty, transparency.
Even when it's tough.
Even when it's tough. Remember when he was just like straight up admitted to those mistakes? It's refreshing, isn't it?
It is. You don't see that a lot.
Yeah.
From people at his level.
To see that humility from someone, I mean, he's Warren Buffett.
It's a reminder that nobody's perfect.
No.
Even the Oracle of Omaha.
Right.
But what sets him apart is that willingness to acknowledge those mistakes and to learn from them.
He's not trying to like sugarcoat things.
Well, no spinning.
Or spin.
Yeah.
He just puts it all out there.
Keep it
good and bad.
just for everyone to see.
And I think that's why people trust him.
Oh, absolutely.
Right.
That transparency has built an incredible amount of goodwill.
Yeah, and he's earned that trust by consistently delivering and staying true to his principles.
It's proof that you don't have to compromise to be successful.
Yeah.
In fact, you know, those values often lead to the most enduring success.
It's not just about business success either.
Right.
Right.
He's had a bigger picture in mind.
He does. He advocates for things. He believes in.
Like helping those less fortunate.
Yeah.
Maintaining a stable currency.
You know, it's like he's saying to the U.S. Treasury, be responsible with the money we give you.
Right.
You take care of those in need.
It's a powerful message.
It is. It's like he's saying, business leaders, we have a responsibility.
Yeah.
It's more than just profits.
It's about making a positive impact.
Right. And that resonates with people.
It does. It does.
Especially now, right?
Especially now.
People are looking for...
Because they're looking for leaders they can trust.
Leaders they can trust.
And Warren, you know, he's got that integrity.
He does.
That willingness to speak his mind that's earned him respect from all sides. He's become more than just an investor. He's an icon.
A cultural icon.
A symbol of wisdom.
And common sense.
Common sense.
And these letters, they're a glimpse into that wisdom. They remind us to think long-term.
Absolutely.
To act with integrity. And to use our success.
To make a difference.
To make a difference.
Yeah.
So, as we wrap up this deep dive into Warren Buffett's world.
It's been a fascinating journey.
It has.
Hasn't it?
I'm left with this one thought.
What's that?
What would you ask him? If you had the chance.
That's a great question to ponder.
It is. It is.
Yeah. Yeah.
It's been a pleasure unpacking these ideas with you.
Likewise. Likewise.
Yeah.
And thank you for joining us on this journey.
Of course.
We'll see you next time on The Deep Dive.
Looking forward to it.
For another insightful exploration of the ideas that are shaping our world.